Selamat sejahtera, saya DURGA LETCHUMANAN bersama dengan Yohan Veloo akan membentangkan tajuk Revenue from Contract with Customers mfrs 15. Scope: IFRS 15 Revenue from Contracts with Customer applies to all contracts with customers except for leases within the scope of IAS 17 leases, financial instruments and other contractual rights or obligation within the scope of IFRS 9 financial instruments, IFRS 10 consolidated financial statements, IFRS 11 joint agreements, IAS 27 separate financial statements, and IAS 28 investment is associates and joint ventures. Insurance contract within the scope of IFRS 4, insurance contract and non-monetary exchange between entities in the same line of business to facilitate sales to customer or potential customers. A contract with a customer may be partially within the scope of IFRS 15 and partially within the scope of another standard. Key definitions for contract: an agreement between two or more parties that creates enforceable rights and obligations. For customer, a party that has contracted with an entity to obtain goods or services that are an output of the entity's ordinary activities in exchange for consideration. For income, increase in economic benefits during the accounting period in the form of inflows or enhancements of assets or decrease of liabilities that result in an increase in equity, other than those relating to contribution from equity participants. Performance obligations: a promise in contract with customer to transfer to the customer either a good or services or a bundle of goods or services that is distinct, a series of distinct goods or services that are substantially the same and that have the same pattern of transfer to the customer. For revenue, income arising in the course of an entity's ordinary activities. For transaction price, the amount of consideration to which an entity expects to be entitled in exchange for transferring promised goods or services to a customer, excluding amount collected on behalf of the third parties. Recognition and measurement: the 5-step model. Under MFRS 15, revenue is recognized and measured using a 5-step model, which is step 1, identify the contract with the customer. Step 2, identify the separate performance obligations. Step 3, determine the transaction price. Step 4, allocate the transaction price to the performance obligation. Step 5, recognize revenue when or as a performance obligation is satisfied. Let's see in a brief of step 1, identify the contract with the customer. A contract with a customer is within the scope of MFRS 15 only when the parties have approved the contract, each party's right can be identified, the payments can be identified, the contract has commercial substance, it is probable that the entity will collect the consideration to which it will be entitled, and last, the contract can be written, verbal or implied. Next, step 2, identify the separate performance obligations. A contract includes promises to provide goods or services to a customer. Those promises are called performance obligation. A company would account for a performance obligation separately only if the promised good or services is distinct. A good or services that is promised to a customer is distinct if both of the following criteria are met. A. The customer can benefit from the good or services either on its own or together with other resources that are readily available. The next, the entity promised to transfer the good or services to the customer is separately identifiable from other promises in the contract. Like example, the good or services is distinct within the context of the contract. Follows by step 3, determine the transaction price. The transaction price is the amount of consideration a company expects to be entitled to from the customer in exchange for transferring goods or services. Variable consideration consists of discount, rebates, refunds, price concessions, credits and penalties. And step 4 will be discussed by Yohan.
Thank you, Durga. So I'm going to follow up with her slides on the steps. So I'm continuing with step 4. Step 4 will be allocate the transaction price to the performance obligation. Where a contract contains more than one distinct performance obligation, the company allocates the transaction price to all separate performance obligation in proportion to the standalone selling price of the good or services underlying each performance obligation. If the goods or services is not sold separately, the company would have to estimate its standalone selling price. Number 5, recognize revenue when or as a performance obligation is satisfied. The entity satisfied a performance obligation by transferring control of a promised good or services to the customer. A performance obligation can be satisfied at the point in time such as when the goods are delivered to the customer or over the time. What does it mean by over the time? Okay, it is constituted as the customer simultaneously receives and consumes the benefit as the performance take place. Number 2, the entity's performance creates or enhance as asset that the customer controls as the asset is created or enhanced. Number 3, the entity performance does not create an asset with an alternative use to the entity, and the entity has an enforceable right to payment for performance completed to date to two methods, input and output, which I will be explaining in detail later part in this presentation. One of the common type of transaction that we would like to focus today is on warranties. Warranties, what is it? If a customer has the option to purchase a warranty separately from the product to which it relates, it constitutes a distinct services and is accounted for a separate performance obligation. This would apply to a warranty which provides the customer with a service in addition to the assurance that the product complies with agreed upon specification. This is a very important slide where we discuss about principal versus agent. This example is taken from the standards. Basically, an entity operates a website that enables customer to purchase goods from range of suppliers. The suppliers deliver directly to the customer who have paid in advance, and the entity receives a commission of 10% of the sales price. The entity website also processes payment from the customers to the supplier at the price set by the supplier. The entity has no further obligations to the customer after arranging the products to be supplied. Is the entity a principal or an agent? The following points are relevant. So there are 4 points why how does it be determined. Okay, goods are supplied directly from supplier to customer, so the entity does not obtain and control of the goods. Number 2, the supplier is primarily responsible for fulfilling the contract. Number 3, the entity's consideration is in the form of commission. Number 4, the entity does not establish price and bears no credit risk. So therefore, what we can conclude is the entity is acting as an agent, and that the only revenue to be recognized is the amount received as a commission. Now we will discuss about the consignment arrangement. When a product is delivered to a customer under a consignment arrangement, the customer, who is known as dealer, does not obtain control of the product at point in time, so no revenue is recognized upon delivery. So there's an example that we can discuss about. One is Daily Motors company owns a number of car dealerships throughout the geographical area. The terms of the arrangement between the dealership manufacturer are such as following. Number 1, legal title passed when the car either used by Daily Co for the demonstration purpose or sold to a third party. Number 2, the dealer has the right to return the vehicles to the manufacturer without a penalty, whereby Daily Co has rarely exercised this right in the past. Number 3, the transfer price is based on the manufacturer list price at the date of delivery. Number 4, Daily Co pays a substantial interest-free deposits to the manufacturer based on the number of cars held. Repurchase agreement. Under a repurchase agreement, an entity sells an asset and promises or has the option to repurchase it. Repurchase it generally comes from the 3 kind of forms that we would like to discuss now. Number 1 is a forward contract, 2 is a call option, number 3 is a put option. So what is basically a forward contract, whereby entity has obligation to repurchase the asset. Okay, call option, whereby it is an entity that has right to repurchase the asset. Number 3, put option, basically it is about entity must repurchase the asset if requested to do so by the customer. Bill and hold arrangement. Okay, bill and hold arrangement, it is a arrangement where goods are sold, services are sold, okay, but it is remain in the possession of the seller for a specific period. It is basically due to the customer lack of storage facilities. This is one of the common reasons. So entity have to require to determine at which point the customer has a control over the product. So the following criteria is very important, and which we have to meet all the conditions as following. Number 1, bill and hold must be substantive. Basically, example like it requested by customer. Number 2, product must be separately identified as the belongings to the customer. Number 3, product must be readily physically transferred to the customer. Number 4, most important, it must not used for the company, the entity itself. So there's no ability, and number, of course, cannot transfer to a third party customer. That's very important. Now we are going to focus on the summary of accounting treatment. So when we treat this revenue from contract with customers as per the Malaysian Financial Reporting Standard 15, it is understood that performance obligation is important. When the performance obligation satisfies to a certain over the time, entity must determine to include as revenue and cost in each accounting period based on the stage of completion. So the stage of completion is very important, and we have to determine by two methods, which is one is output method or input method. Output method is also known as sales basis, and input method is known as cost basis. So the formula for output method, or known as sales basis, is work certified to date, up to the end of the accounting period, over the total contract price times by 100%. While input method or cost method, you have to take the cost incurred to that also up to the end of the accounting period over the total cost total contract of cost times by 100%. So the revenue and cost shall be recorded as following. There are 4 of them. Number 1, the sales revenue and associated costs should be recorded in a P&L as contract activity progress. Number 2, it should include an appropriate proportion of total contract value as sales revenue in the profit and loss. Number 3, the costs incurred in completing that amount of performance obligation are matched with sales revenue, which will result the reporting can be attributed to the proportion of work completed. And last, sales revenue is the value of work carried out to date. So we'll focus on SFP. SFP basically is a statement of financial position or balance sheet. So basically there are three items that we need to focus, and first and foremost we will focus on the contract asset. So this is the formula. So basically you have to take the cost date, okay, then you plus with the recognized profits, which then you have to less with any recognized losses, then you get your total, then you minus with the less with the receivables, which is which should be equivalent to invoice amount. Then you will get your contract asset. Contract asset is also known as amount due from customer. Second one will be on the receivables. Receivables normally we will take as unpaid invoices. Third is contract liability, where contract asset give net amount due to customer, which I previously mentioned on the contract asset at the first part when the accounting treatment for the financial SFP. This amount should be included as contract liability and present separately under the current liability column. Focusing on presentation and disclosure in our slides. Presentation here does mean the presentation in the financial statements. So the presentation is very important because the contract with customer will be presented in the NTC SFP as these three: contract liability, contract asset, contract receivable. So when come to contract liability, it should be recognized and presented in the statement of financial information where customer has paid amount of consideration, okay, prior to the entity performing by transferring control of related goods or services to the customer. Number B, come to contract asset, then the recognize will be different because when entity is consideration is conditional based on the contract or something other than the passage of time, mean matter of time. So the example again which I give is future of performance. But remember, contract asset must be a situation where the customer is not paid. Okay. Then C, contract receivable. Contract receivable basically is about recognized when entities right to consideration is unconditional. Basically there's no conditional per se, but the same thing goes again, customer has not paid to the related consideration. Now we'll go to the disclosure part. Disclosure, there will be an objective why we have to disclose certain information. Basically it is enabled for the user of the financial statements, the stakeholders and so on, to understand the nature of amount, timing and uncertainty of the revenue and cash flow arising from contracts with customers. The following amount should be disclosed. Number one, there's 5 actually. I start with 1. The first one will be revenue recognized from contracts with customer, disclosed separately from other impairment losses. B, any impairment losses should recognize in accordance with International Financial Reporting Standard. Now we use under the Malaysian Financial Reporting Standard. On any receivable or contract asset arising from entity's contract asset, from an entity's contract with customer, disclosed separately from other impairment losses. It should be disclosed separately secara asingan. Okay, so C, opening and closing balances of receivable, contract asset and contract liabilities from contract with customers also should be disclosed. D, revenue recognized in the reporting period that was included in the contract liability balances at the beginning of the period. E, last and foremost, revenue recognized in the reporting period from performance obligation is satisfied in the previous reporting period. So for example is change in the transaction period. Last slide of the presentation. So basically disclosure doesn't stop from there. There's also some other information that should also be provided per se. For example, an explanation of significant changes in the contract asset and liability balances during the reporting period. If there's a significant changes, if not, then you can be silent on the matter. B. Information regarding the entity's performance obligation when they are satisfied. What do you mean by that? Okay, we give a few examples. Number one is delivery. Two, upon shipment. Three, service are rendered if it is related to services. Four, significant payment terms. Number five, details of agency transaction obligations for returns and refund. Another one will be warranties granted, which I think Durga had explained before in this our presentation. C. Aggregate amount of transaction price allocated to the performance obligation that are fully satisfied at end of the reporting period, along with explanation of entity expected to recognize this amount as revenue. D. Judgment and changes in judgment. These judgments are very important when applying the standards and significantly affect the determination of amount and timing of revenue of contracts with customer. Last and foremost, asset recognized from the cost to obtain and fulfill contract with customers. This should also include pre-contract costs and setup costs. The method of amortization also should be disclosed. Thank you everyone for listening our presentation. So I hope our presentation slides, our explanatory are very helpful for everyone. Thank you. Terima kasih.